Hello, everybody. My company is much, I guess, newer or in its infancy stage compared to my predecessors here. I'm also a new CEO. This is my first time presenting the story at this conference. And I come from a background of working with a much larger company, if you're familiar with B2 Gold. So I spent about almost 10 and a half years working with the B2 Gold group. And so I was asked to join this company a couple months ago, and people went, why would you leave the comfort of being with B2 Gold? And I have to say I'm so thankful I made the choice, because not just because of the silver prices, it's also because of some of the things that we have in our control that we've been doing, and I'll get into some of that. I will be making some forward statements, but you can read those on our website. So there's a lot of reasons why I got into this story, and number one I would say is it's a proven asset because it's a past producing project, and it's within a larger scale producing system. It was fully funded. It's nice to say that when I came in here, it was already cashed out. We had over $5.5 million when I came in. It was nice because we had some runway and we could get some drilling done, and that's exactly what we're doing. So we have 2 rigs that are working on the site right now, and that's a 9,000 meter RC drill program. So we have a clear path to a resource estimate, and you might think, well, how can we get there when we just got started? Well, there was some historic drilling done on the project. There was about 130 holes that were done on the project historically, and we have all that data. So we're basically going to tack on the additional drilling that we're doing right now, which is approximately 30 holes, and that should get us to a mineral resource estimate. That'll just be an inferred resource, but just to give you some idea of maybe where this thing could get, there was what was called a JORC exploration target that was completed by the previous operators of the project. And that looked at about 23 million tons to 45 million tons of ore. So roughly that's giving you a range of between 73 million to 150 million ounces of silver equivalent. So that's just the target, and that's what we're trying to prove up here. Very disciplined and share capital, and sometimes that's not exciting to people, but I'll show you maybe why that could be. So in Prince Silver, we're located in Lincoln County. If anybody's been to Las Vegas, it's about a 2.5-hour drive just north of Las Vegas, so very easy to get to. And we're in the Pioche mining district. So anybody who's been through Pioche, you've probably seen it. It's an old mining town. The whole area is basically littered with old head frames. And I just went down there last month, and it was interesting to see because you can literally see that there's head frames all over the place. So that area has produced now, well, actually, sorry, as of about 2 weeks prices ago, it was about $5 billion worth of metal. So a lot of that would have been silver, zinc, lead, and some manganese as well. And we're in what's called a carbonate replacement deposit. So that's often known for its size, continuity, and also for its metal diversity. And we're seeing all those attributes here. So in particular, we're obviously looking for silver, but we also have zinc, lead, and manganese, and some gold. So 4 of those first metals are all included in the USGS critical minerals list, which could be important to us because we could benefit from the US government either from the form of money, grants, potentially, and also for streamlining our permitting. So we'll see how that goes, but we've already reached out to the government, and there seems to be some interest there. We'll see how that unfolds. So here's a photo on the left here, and you might think, well, what's going on down here? That's basically what it looked like if you were mining in the early 1900s. So you could see it was pretty primitive. I wouldn't say quite caveman-like, but it was pretty early stage exploration there. That's what they were mining there. So that was 1.1 million tons of ore that they mined. That was about 100 grams per ton silver. And that would have been just chasing high-grade fissure veins. Obviously, if you're using a method like that, you're not really going to be wasting your time chasing lower-grade material. So in this case, it is produced about $600 million worth of metal. That's from a pretty small number, only 3.6 million ounces of silver that was produced there. So at today's modern methods, we think that we can come in here. There's going to be a lot of material that was left over, and a whole bunch of material that was really not even explored, down at depths especially. So it was a past producing mine, and if you see here, you see a couple holes, and you might be wondering what's going on here. Essentially, those are mine collapses. So in the last 75 years since the mine has been in operation, it has collapsed. So why is that good? Well, for me, I'm not a geologist, unlike some of the people here, but that gives you basically a glimpse into the underground. So you can see right there, this layer here would be your limestone, and because it's called a carbonate replacement, you have this darker, magniferous material that has come in to replace that material. So it is a CRD, and what does that mean? Well, it's been historically produced, mined down to about 254 meters, and there's multiple layers here. So in this case, we have an upper oxide layer that has more of the manganese, but also rich in silver, and then you have a lower sulfide zone, which would be higher in gold. In this case, we have what's called the PO shale. The PO shale is kind of the lower level that has basically been untouched. So because this was mined up until 1949, they weren't mining down to depth, and they weren't even testing down to depth. And so it wasn't until 2012 that a company called International Silver did a little bit of drilling down at depth. And if you were here for Rick Gruel's talk, he said 2012 was a really rough year. Well, it was. And that's exactly why they did hit down at depth, but nobody cared at that time. And so there's the opportunity for us to expand on that. So there's 129 holes of historic drilling. So that's roughly about 16.6 kilometers of drilling. So we have all that data. What does that mean? It basically bypasses a couple of years of exploration for us. So that kind of gives us a head start to get into this mineral resource estimate. So this makes me sleep a lot better at night now that I know that we have some drilling results under our belt. So just last week, you might have noticed we put out our first batch of drilling results, and hallelujah. The first hole hit 1,300 grams per ton silver and also had 14% manganese. So the second hole, that was 4.78 grams per ton. That is gold. It is deeper, but it's still hitting 355 grams per ton silver. And this map here just kind of shows our property outline as of last week. And this red ellipsoid is basically where that resource target area is. So we're just drilling in here. This doesn't include all the historical holes, but just to give you an example of kind of where we're drilling, we're basically trying to infill between some of those old existing holes and verify the JORC target and resource. So we liked the drilling so much last week that we just acquired all this green ground here. Essentially, that has doubled our land position in the area. So we think there's a lot of room to grow in terms of acquiring more property here. Stay tuned for that. So looking ahead, I've seen a number of my peers put out charts like this. What do we have to look forward to? We have a second rig that just started up drilling. What does that mean? It's going to add to our drilling results, but also speed up the process. I mean, in a $100 silver environment, we want to get results out as soon as possible. So that's what we're trying to do. Probably see the next batch of results in the next few weeks. We have I would very much likely think that we're going to do a second phase of drilling coming up in the second quarter. And then a maiden resource we're targeting for the end of this year. And then somebody will ask me, I'm sure at some point, is what about the metallurgy? When there's manganese here, that can often be an issue. And I saw Dan Cappy's around. He said, don't worry, we have a solution for you. We've done it before. We've done it with a company called Aftermath Silver. They had manganese and silver. We figured it out. They have over 95% recoveries. So that's the kind of, that's the lab that we are using here as well. And so we're on top of getting that met work done as soon as possible. So how do you evaluate a small company like that, or like us? And what you're looking for here is to get in before you get the re-rating. I've heard this time before, but in our case, okay, let's take a look at, I'm not telling you that they're peers, but let's just look at some of the companies that are pre-production at a resource stage, and this is as of last week's prices. They're all higher now. But you're looking at, on the high side, you have Vista Silver at $2.9 billion market cap. That was giving them an average enterprise value. And in case you're not familiar with that metric, it's basically your market cap, adding your debt and then minusing your cash. That gives you an enterprise value of how much this company is worth. And then on a per ounce basis, that's what you're getting, about $7.89 per ounce. That's on the high side. Go down the list, you're going 446, 225. Averaging, you're looking at about 284. And again, this is as of last week's prices. So let's just say you're conservative, and you chop that in half, and you gave us maybe $1.50 per ounce. And we're currently sitting at a $40 million market cap. So if we have a resource that comes out anywhere in that JORC target range of, say, maybe 100 million ounces, you could probably do the math pretty easily. So normally this is not a very exciting slide. People usually just kind of end it off there. But in our case, we have a very disciplined share structure. So we only have 51.6 million shares outstanding. What you might not see very often is these contingent rights. So this is based on the acquisition that we made for these assets. So they included contingent rights, and that's because they will be issued out to the vendor of the property. And that's only if we put out a resource estimate of 100 million ounces of silver equivalent. That could get reduced if we actually have a resource of that size before July 11th. So there's some motivation for us to get a resource done very quickly, but we don't have to. And then we have cash. I mean, we're sitting at $5 million. I think just since I've been in this conference, I've been offered a few $1 million in terms of financing. We don't need to do that, but we have the cash. We're going to continue drilling for now. We do have a whole bunch of warrants that are in the money right now, so we might see some more cash coming in there, so there's not really any need to do a financing. And then insiders, founders, we own about 26% of the company, and then we have some newsletter writer friends like Brian here who are shareholders, and we do have a couple of institutions as well, and then retail shareholders. That is me on the left, and you're probably used to seeing a man named Ralph Shearing. He is still the president here at Prince Silver, and is very much involved. Both him and I have been through exploration right into production stories, and we're hoping to do this again here at Prince. Thank you very much.